Hey guys, this is Jackie Jones with your Max Elite Realty Group. So today I met with the cat lady lender, Crystal Vroman with CrossCountry Mortgage, and we had a VA loan class that I was able to get on camera. So I have that coming up next for you guys. It has a lot of great information about what the VA loan is, what it means, what it's not, how to use it, and then what Crystal can give to her VA buyers, but also what the two of us as a team can do for VA or for sellers in our market that can help you when you're looking to sell. I also have this buyer's guide that has a lot of great information when you're selling, whether you're using or when you're buying, whether you're using a VA loan or not. I have a seller's guide as well if anybody's interested. I have a PDF copy that I can send to you, or I can give you the physical copy if you want to have a meeting. If you want to click the link down below, you can set an appointment, a Zoom call on through my Calendly link. And as always, subscribe and like this video. And up next is Crystal. Thanks.
Okay. Hey everybody, super nice to meet you. I'm Crystal Vroman. I'm the cat lady lender with CrossCountry Mortgage. I'm a retired service member myself, and I do a lot of work, especially in this area, with our veterans. Personally, I don't charge any VA bank fees. I don't charge any origination fees, things like that. So it is a really clean and easy loan. However, as you guys probably know, VA loans are extremely misconstrued. The concept of a VA loan can be very different from bank to bank to bank. So if we take out all of the unnecessary marketing things you've seen and actually just get to the root of what a VA loan is and how you guys can utilize it, I think it gives everybody a lot more knowledge and a lot more empowerment to actually go and do those things and make sure that you're getting the right deal. So I've got some handouts, I've got a bunch of reference material you guys can get with Jackie, and she can give you whatever you guys need. We're gonna go through just some really basic overviews. I will probably stutter, but I think you guys will get the gist, okay? So the first thing we're going to start with is what is actually a VA loan. Then we're going to kind of go through who is eligible, what your realtor has to know, right? And it's really important that you guys, when you are working with a real estate agent, if for some reason you didn't use Jackie, that you have somebody who actually knows what they're doing. You guys may, think it doesn't really matter, all realtors are the same. That's not true. Just like all the banks are different, all of our realtor partners are different as well. I want to debunk a couple myths and then talk about some of the scary things that you probably have heard of, but you probably haven't heard correctly about. Appraisal, tidewater, property requirements, and then just two other things you guys may have heard about, things that Jackie is pretty familiar with. New construction, whether it is new construction as a track builder or if you're actually building a custom home and you need a construction loan. And then I also want to touch on assumptions, which are probably not your friend unless you have not owned your home for very long. But we'll get to all of those. First things first, what is a VA loan? So a VA loan is a benefit that is provided to qualifying veterans or their family members. It is a government guaranteed security, right? So it's a government-backed mortgage security. That means the tertiary investor that's acquiring this loan before it goes to the bond market is Ginnie Mae. Ginnie Mae is really important because that's one of the big three entities, and it's the only one that works with government financing. Okay, so government-backed securities all run through Ginnie Mae. So when people say VA loans are different, they're only slightly different than your government-backed securities like USDA and FHA. You do have 100% financing available with a basic entitlement. However, you also have additional entitlement available. So you can have two VA loans out at the same time or more. Whether or not you're able to do 100% financing on multiple properties is dependent on the total amount that you used in your first loan versus the second loan. You can do a VA loan and put a down payment down as a requirement if you have two or three out at the same time. And you can talk to me about that directly because it's a big math algorithm that you can't really explain very well. It's very specific to you guys individually, okay? Every state has loan limits, okay? North Carolina is gonna have its own loan limit for VA. Additionally, there are high-priced counties, right? And those will have higher loan limits. Now, think in your minds like California, right? If you just came over from 29 Palms, obviously the houses there are more expensive than they are here, so you can't have the same loan limit across the country. There are 3 high-priced counties in North Carolina None of them are near any bases, but if you guys go to one of those, mazel tov, we can talk about it. Okay. There is no limit on purchase price or loan size if you're using your basic entitlement. That doesn't mean it's the first time you've had a VA loan. It just means it's the only VA loan you have out at that one time. That's when you use that basic entitlement. VA loans are great. They're for veterans, they're for veteran family members, active duty military members. However, as a veteran, you still have to meet credit qualifying guidelines, right? As well as income standard guidelines. So just because you served in the military doesn't mean you can necessarily get a VA loan. We are a lot more flexible. I personally am very flexible because I do a lot of VA loans because I work directly with the RCA, which is our base group out of Atlanta. And when I say our, I mean the VA offices, right? Our regional authority is that Atlanta office. And because I have connections over there, I'm able to kind of circumnavigate our own underwriting process if we need to get an exception from the VA directly, whether that's for an appraisal revision to give you guys more value on your appraisal, or if there's an actual underwriting issue like you're the wife of a service member and you're in default. So who is eligible for a VA loan? So VA loan eligibility means that you meet the basic criteria for length of service as well as character of service. Okay, those are going to be different depending on how you served. So if you are active duty military is not National Guard and it is not the reserves. Those are completely different things. So do not come to a bank or a lender and say, I was in the military and then I got out and I did 3 years, and tell them you're active duty, because if you were actually a reservist and you did 3 years, you will probably not be eligible for a VA loan. Okay, reservists and National Guardsmen have to have a sufficient service record. Now, that means either 6 years of reservist time or 6 years of National Guard duty time. And within that time, you have to drill a certain number of days and have enough retirement points. Typically, that's 300 retirement points, but the number of retirement points does not override the actual time period that you had to serve. Now, if you are serving during a time of war, like we are right now, 90 days of active duty service for a reservist or a National Guardsman from August of 1990 until now, because we've been at war since then, will supersede your 6 years of service and give you full entitlement eligibility based on your service time, right? We still have to have the right character of discharge. So you could be a National Guardsman, have only been in the National Guard for 4 years, but if you deployed or you were activated for national emergencies for over 90 days, you would still be able to purchase even though you hadn't fulfilled your 6 years. Does that make sense? So in addition to our active service members, whether you're active duty or an active guardsman, active reservist, we also have our veterans. Those veterans, we're gonna want an honorable discharge. There are some other types of discharges that you can still have entitlement for. Some exceptions apply. If you do have an other than honorable discharge, you may still have entitlement. That's where you work directly with me. I pull that certificate of eligibility for you directly from the VA, and we can go and try and make a case to them for why you should maintain your entitlement or get your entitlement renewed. Okay, so your surviving spouse of a veteran, the spouse of a veteran who is KIA or missing in action or a POW. Okay, if you are the surviving spouse of a service member who has passed away, you may have full entitlement to utilize, whether that is in keeping the current mortgage that you have and having it put in your name, or if it is acquiring a new separate residence. Okay. So if this applies to you and you know that you do have the VA loan as an option, the next thing we want to talk about are the important things that your real estate agent needs to know about. There are things you should know about, obviously, when you buy a house. However, it's really important that your agent is looking out on your behalf for these specific items, okay? Those big things are going to be making sure that you are aware that you need a pest inspection. Pest inspection has to be done on any VA property, unless you have a pest waiver, but you will only have that with new construction. So if you are buying a resale home, it has to have a pest inspection done. Now, it does not matter who pays for the pest inspection. It does not matter how expensive it is. It doesn't matter if you do the pest inspection plus 15 other inspections, okay? But we have to have a clear pest inspection. Now, if there is a pest problem with the property, you can have that treated and then have proof of the treatment along with that new clear pest report, and that will be fine for us, okay? Other things that are important are private and shared well water. It does not matter if you have your own private well or if you have a neighborhood shared well. If you are on any type of well source, you're going to need a clear well water test as well. You just have to remember that this loan program, I'll get into the history of how VA loans came about in the first place, but this loan program, the golden rule is that everything has to be for the benefit of the veteran. You'll hear those words a bunch, anything that you're Googling online, benefit of the veteran. But we all know how the government kind of sees a veteran. It's certainly not me, right? It is Grandpa Joe, right? A disabled Vietnam veteran who cannot look out for themselves kind of person is what they think in their mind. So if you go into looking for a home with that in mind, you'll be able to avoid a lot of these kind of larger issues that people don't think about. If you had a well, right? Grandpa Joe is on a well and that well is contaminated and the VA says, oh, we're gonna guarantee this mortgage-backed security on this property. Well, you would absolutely end up in a lawsuit trying to sue the government because your grandfather got poisoned, right? So that's why you have all of these additional requirements. Private road agreements. If you are in this particular area, we do have quite a few private roads. That means it is the duty of either the individual on that road or the shared individuals, right, in that neighborhood. They are the ones responsible for maintaining the road. If there is a cost for that or a charge for that in that private road maintenance agreement, those are things that we need to know about because we need to address them with the attorney prior to closing. An actual private road maintenance agreement used to be a requirement. VA has lifted that in the last 12 months, so you do not need a written agreement anymore. We used to have people like Jackie that would literally go down the road and have every single neighbor sign a piece of paper that says you guys share the cost for stuff. We don't have to do that anymore. They kind of, they got rid of that about, I want to say 12 months ago, maybe more like 11, okay? The other thing that's going to be important is your septic. Now, depending on where you guys were stationed previously, you may have heard that a septic inspection is required. It is not required in the state of North Carolina unless it is noted by the appraiser when our appraiser, who does our bank inspection of the property to establish value and to make sure that these safety items are in place, if they see an issue like there's a giant sinkhole in the middle of your front yard, they may suggest that you get a septic inspection. Otherwise, it is not a requirement. Additionally, same thing with surveys. So if you guys were ever stationed in Florida and you had a VA loan, you will think a survey is a requirement. Sellers are not required to provide you with a survey. You are not required to get a survey. If you choose to do so, that's great, but it is not a requirement for a VA loan here in North Carolina. Okay. The other thing that's really important is the property conditions. And this is where we go back to, like, can Grandpa Joe live in this house? So when you guys are looking at this property and you're walking the property with your real estate agent, if you don't have Jackie, it's important that that agent is really looking for these minimum property requirements. Okay? These are the safety issues that the VA has already established, saying, hey, if these things are wrong with the property, we're not going to guarantee that mortgage. Okay? The big ones you'll see here are they're going to be safety issues, right? So broken steps coming up the front steps, not having hand railings on the stairs, having cracked concrete, like significantly cracked concrete, missing a step off the back porch, holes in floorboards, holes in boards on decks, peeling and chipped paint because of lead paint requirements. So if it looks like there's peeling and chipped paint and it could have been lead paint back in one time, they're gonna want that sealed, covered, repainted something so that you don't have that. Wood damage is another big one. So if you've got wood damage around the windows, right, that's an easy way for Grandpa Joe to catch pneumonia in the winter, right? So you're gonna want those things to be fixed. No exposed electrical wiring. Pretty much if you could have a toddler in the house should be good. But that's why you utilize a real estate agent. If there's items like a barn or a shed, that's not attached to the house, but it's on the property, depending on whether that particular entity holds value to the home, you may have that inspected by the appraiser as well, and it would still have to meet safety standards. Okay, so it's really important that your agent is working with you, that they understand you're using a VA loan product, and that they know about those minimum property requirements for you. The other important item is like the pest inspections, the well inspections. You guys want to get those ordered as soon as you're under contract, because if you wait for me to come back and tell you when I get the appraisal 2-3 weeks later, oh, by the way, you're on a well, now you need to go get a well water test, you are endangering moving your closing date, because we cannot close until we get those well water tests back. Those can take 10-15 days. If the labs get slow behind, you're kind of shooting yourself in the foot. Okay? Now, VA myths. VA myths are one of my favorites because everybody likes to tell me about VA loans when they don't do them every day. So I have heard probably as many crazy stories as you have. Everyone that says, this is the rule, this is the rule. Most of those things are not true. The seller does not need to pay for your pest inspection. They never have. VA loans have a threshold of fees that can be charged by the banks, like me. If I am charging you a bunch of erroneous fees, right, and you go over that threshold, a pest inspection is a requirement to get the loan, but if I'm charging you too much money, you can't pay for it. So who's your other option? The seller. That's where that myth came about, that the seller has to pay for your pest inspection. Now, if you're a good negotiator, oftentimes Jackie works that into the contract anyway, just gets that covered for you. That's great. But it is not a requirement. If you want to ask them not to pay for anything to help you guys be more competitive, get your offer accepted faster, or you really, really like the house and you're willing to do anything to get it, that's one of the things that you can make sure you're not asking them for. Makes you seem like you've got your stuff together, and it's one more thing that the seller doesn't need to worry about. The seller does not need to pay for any of your closing costs. If you have a good negotiator and you want them to pay for your closing costs, it's absolutely something we can do. We have a lot of strategies between the two of us on ways that we help get that done for you guys, but the seller's not required to pay for anything at all. Again, unless you have too many bank fees being charged by the bank in order for you to meet that threshold requirement where you are no longer able to pay for anything, right? So those closing costs, you can absolutely pay for. You can absolutely put a down payment down. You can cover an appraisal gap, right? The seller is not required to drop the purchase price of that house down to the appraised value. That's why it's important that your real estate agent knows how to do a CMA, so you guys have comparable properties to compare. But if you go, hey, we really like this house and we don't care, we're gonna offer $220 on it, and the appraisal comes in at $215, the seller does not have to come down to $215. You can absolutely cover the difference and pay cash for that $5,000 difference. That's a big myth that I've heard a lot in the last 2 years with these really competitive offers and people going over asking price. That is not a rule. You can absolutely cover the gap and the difference between the appraisal value that we give you, right, the value of the home, and then the purchase price that you agreed to. Closings do not need to be longer than 30 days. I've closed VA loans in 16 days. I closed my own VA loan in 18 days, and I was in Tidewater, and I had a bunch of repairs that had to get done, and it was a little bit dramatic. But 18 days it was, because I had to get out of my apartment, and we were gonna close on time no matter what. Okay? In North Carolina, please, for the love of all things, please listen to me. North Carolina is a due diligence state. Other states you have lived in may not be due diligence states. Earnest money and due diligence are not the same. They are written into your purchase contract when you go to make your offer and you go, hey, seller, I would really like you to take my offer. I'm super, super excited to buy your house, and I'm gonna give you this money up front. Okay, due diligence money is paid directly to the seller when they accept your offer to purchase. I believe it's within like 48 hours, typically, 24, 48 hours, right? So you're gonna wanna pay that person up front. If you back out of the contract, for whatever reason, you do not get your due diligence back. The escape clause in a VA loan has nothing to do with due diligence. It is only pertaining to your earnest money. Earnest money is the check that you write to the attorney's office that is then released to the sellers after your due diligence period. If you back out of the sale during your due diligence period, your earnest money can be returned to you. Or if there is an issue with the property where you cannot acquire it as a veteran, your earnest money can be fought for and returned to you with the VA escape clause if your home does not appraise or does not meet minimum property requirements. Due diligence, you do not get back. That's why it's so important that you actually get a real pre-approval from a real bank, not an online bank, not somebody who doesn't know you. If you have not sent in all of your docs, if you had not had to go and get your tax bill, right, and go and get your W-2s and the last 2 months LESs and given them to a lender, you are not pre-approved. It's really important that you go through and you do all of those things up front so that you're not risking losing that due diligence. And it may only be $2,000, but $2,000 is a lot of money, right? So we can't get it back for you. Big myth, probably the biggest myth with VA in the state of North Carolina is about due diligence monies. The other one is that you can't have more than one VA loan out at the same time. We talked about that a little bit already. You can absolutely have more than one VA loan out at the same time. Oftentimes you guys will see this when you're PCSing to a new duty station and you go, hey, we got a really good deal on this starter home. We were in Jacksonville for a couple years and we know that our mortgage is less than what everybody else is paying in VAH. So I know I can rent this house out and keep it as an investment property and it's going to continue to appreciate and hold value, but we're PCSing somewhere else. VA loans have to be used for primary residence purchases, right? So that means you have to live in the property as a primary residence. But if you acquire the property as a primary residence and then you move and you hold it as an investment property, you do not change that loan type, okay? That is still your VA loan that was a prior primary residence, and you can use your entitlement to go buy a new primary residence at your new duty station or your new retirement or what have you, okay? You do not have to have your entitlement restored in order to go out and get a second VA loan. Banks do not have any requirement to charge you any special bank fees for VA loans. I will see some of the loan estimates that real estate agents provide me, and I will see a VA transaction fee and a VA coordination fee and a VA loan cost thing. None of those things are real. I charge no bank fees to a veteran. So when you get your loan estimate, right, or your closing disclosure, if you guys have already bought houses, that first whole blank is completely blank unless you choose to buy your interest rate down and pay discount points, right? Discount points and origination fees are exactly the same thing. One, the bank forces you to pay, the other you choose to pay. But there is absolutely no bank fee or additional cost associated with a VA loan. One thing that will be a little bit different, maybe your appraisal. Your appraisal cost is going to be different than, say, your friend who just bought a house with an FHA loan next door. Appraisers for the VA are government employees, and they have to get paid the exact same standard regardless of how much work they do, how fast they do it, whatever. So you're kind of working like with the DMV there, so they have a standard cost depending on the county you're buying in for that appraisal. Okay, so if you had somebody who bought in Pender, somebody who bought in Onslow, and you guys paid different costs for your appraisal fee, it's not the bank. Bank cannot charge you any more money for your appraisal. It is the standard VA appraisal fee specific to wherever it is your property is located. And my biggest myth that I absolutely giggle at, and I will tell you a small personal anecdote as long as you do not judge me for it. The VA is not a bank. The VA is not giving you money to buy a house. The VA never will give you money to buy a house. The VA is in a massive deficit right now. They don't have any money anyway, in case you haven't been to our hospitals. The VA will never give you a loan. You cannot go to the VA to get a loan. A VA loan is a government-backed security type through Ginnie Mae, right? You have to have a bank that provides you with that loan type. I am ex-military intelligence. I'm retired from the US Army. I was a cryptologic linguist. So I was the 1% of the 1%, top high speed, super smart. And I have multiple college degrees. And when I got out of the military, I thought the VA was gonna give me a loan because that's what I was told the entire time I was in the service. And when I met my very first boss, who eventually got me into mortgage lending, he gave me his friend's business card, who was a real estate agent, and he asked me who I was getting a loan through because he was a lender and he wanted to help me buy my first home. And I looked this man dead in the face and said, I'm a veteran, I don't need a loan. And then this man hired me 6 months later and started me on this whole new career path. And that's why I can tell you, like, I'm smart and I'm a big nerd. And I wasn't an ignorant person, but to this type of financing and what we're able to do, I was. And I was the 1% of the 1%. So that's why it's really important that you guys do have a resource. And if you have any questions, reach out to Jackie, because she will absolutely get you the answer, whether it's from her or whether it's from me. So VA myths debunked. I hope that covers some of the things you guys may have already heard of before you watched this, because it is kind of interesting, the different things you hear in our industry. Okay. One of the other things you guys may have heard of is appraisals, right? Oh, people don't want to accept VA loans because the appraisals are too hard or the appraisals are different. That is not necessarily true. We do have those minimum property requirements that we already talked about, but the basis for those minimum property requirements is the HUD standard, HUD, right? Housing and Urban Development. The HUD standard is Ginnie Mae's standard. So all government loans have the same safety standards, okay? The additional minimum property requirements that are for the benefit of the veteran to protect you, right, are very few and far between. You can't go and buy a FHA loan if it has peeling and chip paint or wood damage around a window. All of those are the same safety requirements for any government-backed security, okay? The appraisals are all done through the VA's portal. This is kind of where you start working with the DMV mindset of like, you're gonna submit a document and then you're gonna wait and they've got 15 business days to get back to you. That's how your appraisal process works. So if you don't use me for your financing, it's really important that you know exactly when your lender has actually ordered your appraisal. Because go get your homeowners insurance, sign these documents for me, and then we'll get your appraisal ordered right away. It's one of the ways we also stay more competitive in our local market because people know me, right? Do a lot of VA loans here, and they know my appraisals are ordered within 48 hours of you going under contract. The reason that's important is because we want to get your appraisal back during your due diligence period to protect your earnest money and to also help you guys negotiate if you're going to do any repair requests or things like that with your real estate agent. And Jackie can tell you more about how that stuff works, but there is a timeline involved there. And usually you want to have your appraisal back first so you know if you need to do some negotiating, right? So a VA appraiser, once we've got your offer to purchase, right? Once we've got all of your initial loan disclosures signed, then we are able to actually go into the VA's portal and order the appraisal. Now, from the time that the appraiser accepts your assignment, the day after that acceptance day, they have 10 business days in Onslow County. Okay, now that's different in other counties, but Onslow County, obviously it's pretty busy area for VA appraisers, right? So they have a lot of requests here. So they're given 10 business days after the day they accept it in order to get that report back to you. Now, they may go out and inspect the house the next day, but they do not have to give us the report for 10 days. Now, if you're talking about 10 business days, right, we've got weekends in between, we may have holidays in there. This is where we kind of have a push on that due diligence period. You're talking at least 2 weeks you're gonna need in due diligence if you wanna have that appraisal back. While many appraisers do get us the report back earlier than that, because they're just good people, they don't have to. And if they're busy or if they're on vacation or if they just are not a good appraiser, they can just wait until literally the last day. We cannot even reach out to them to talk to them about the report until after the report's due date. One thing that you may hear about are your properties being subject to. That's where kind of the whole like, oh, VA appraisals are harder. If there is a safety issue or a degradation issue, something that needs to be fixed, you'll get the appraised value. It'll say, hey, yep, your sales price was $250, your appraised value is $250, but it's subject to you repainting, the peeling and chipped paint around the window, or it's subject to adding a handrail to the stairs. Now, those repairs that it's subject to, right, have to be completed before you can close on the property. The other thing that can happen is your home cannot appraise at the same value you went under contract at. So like we talked about earlier, you are able to cover the difference in that appraised value and the purchase price. If there's a gap, we call that an appraisal gap, right? You can just bring the difference in cash if you don't want to negotiate or fight about it. You love the house, that's great for you. The VA wants to do the most they can for the veteran. So instead of just giving us an appraisal that's undervalued, they go through what's called Tidewater Protocol. So Tidewater Protocol is where the appraiser kind of goes, hey, I don't know where you got your numbers from, and I don't know if we're gonna meet the sales price. So instead of just giving us a report and being like, here's the value, you're done, they come to us and go, hey, we don't think it's gonna appraise. Can you provide us with some evidence that supports this appraised value? Okay. Typically those will be the comps that your real estate agent has already talked to you about, showed you. If they're good agents, they've already provided them to me, just in case we have to even do this, then I've already got them on hand. We only have 48 hours to reply to the appraiser's Tidewater Protocol, right? So they come to us, they go, hey, we're evoking Tidewater Protocol. We go, oh crap, all right, we gotta get our stuff. The listing agent can provide comparable properties. The buyer's agent can provide comparable properties. Then we go back to the appraiser and they have an additional 5 days to write a new report and get us a new report. So one of the other great options you guys have is new construction. Instead of acquiring a resale property, if you are looking to build a home or buy a home that is newly built, you have 2 different options there. So we're going to talk first about buying a new construction home that you don't need a construction loan for. So this is still a regular VA loan. It is regular permanent VA financing on that property. You also will get a pest inspection waiver. You do not have to perform a pest inspection because every new home builder, every builder that is selling a new home has to give you a pest warranty, right? There is a required warranty. It's for all homes, right? But especially for VA, the reason this works for you is because there's a 12-month guarantee that you will not have any pest, termite, wood damage. And if you do, your builder is the one that has to pay for that. So that supersedes the need for our clear pest inspection, okay? One of the things that we want to make sure is that your real estate agent knows the requirements for a VA appraisal on new construction. So the VA wants to see that the house is really fully complete for you. You've got to have countertops installed. You've got to have the lighting installed. You have to have appliances. You can't have any exposed electrical things in order for the VA to sign off and say that you can live there. Now, obviously, those things are going to be done before you move into the property, but what we don't want to do is order the appraisal. The appraiser goes out and says, oh, there's exposed electrical. The house hasn't been built yet, because then you have to pay for a re-inspection fee for them to go out when it is completed. And that's an additional like $150 that if we can save you that, because your realtor can just tell us when all this stuff is done anyway, and then we'll order it. It's a good way for us to help save you guys a little bit of money, okay? The other option, as far as construction is concerned, is actual construction financing. We call this construction to perm, because your loan is going to go from a construction loan, which is essentially me giving money directly to your builder in order to build the house, and that's going to roll right into your permanent financing of you paying the mortgage, okay? So that construction to perm financing is only required by builders if the builder can't foot the bill to build your house themselves, right? If you have a custom home builder, or if you guys are saying, hey, I've got these blueprints and I want to go build it, we can absolutely help you find a builder to do that. Jackie's got some great builders that can do all that work for you, but those builders may need money from the bank to build your home. We can do that construction financing for you. I still charge no bank fees. We roll the interest during the construction period back into your financing. So you guys aren't having to make interest-only payments. You don't have to make any payments until the house is actually complete, right? We just have to make sure that the house appraises for what it's worth. And that's where it's important that your real estate agent is tracking, what the value of the home has to be, so we can make sure that everything aligns for you when you are closing. Now, you close on that construction loan before your builder ever breaks ground. So you essentially get your mortgage, and then the day you close, your builder is essentially given a check from me to go start construction. And they have to do it within a certain set time period. And you have different types of loans for that. 9-month construction, 12-month, 14-month. Those different construction periods your builder is held to. And if they delay past that, they do face repercussions. So it's a good thing because it protects you from some builder just being like, oh, we're slow, like we'll come back to you. Your house doesn't get built for 2 years. It's very, very different than your tract builders, okay? Construction to perm is a great option. This month, it's May, it's Military Appreciation Month. So we actually cover the cost of the appraisal if you are a construction to perm loan that comes to me in the month of May. It's one of the incentives that my company's offering right now. I don't know when this video is gonna post, so if it's not May anymore, sorry, come back to me next May. But it is a great option for you guys if you are interested in doing a custom build. I mean, you can go build a $700,000 house with zero down. I just did a new construction in Raleigh. It was a custom home, and it was 1.2 million, and it was VA. Dude didn't put any money down. It was pretty great. Good for him, and it's a very, very beautiful house. Okay. The other thing that you've probably heard people start talking about in the last 6 months is this assumption of VA loans. Assumable mortgages, assuming a VA loan because it's got a 2% interest rate, or it's got, a super low rate and blah, 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 which is great. You can assume any government-backed loan because Ginnie Mae loans are all assumable. So whether you're VA or not, you can assume a VA loan. You do not have to have any entitlement. A civilian can assume your VA loan. Now, word to the wise, your entitlement stays with your VA loan. So if you own a home and you go, oh, we're gonna let somebody assume it, and that person isn't a veteran, your entitlement stays with that property. And if that person forecloses on that home or defaults, that default is tied to your entitlement. Now, if someone who is eligible for a VA loan decides to assume your mortgage, right? And this is a process that you are very much involved in because assumptions are very strategic. Your entitlement can be restored, right? So they would have an SEO done, which is, the military loves acronyms, right? Essentially, you take that other veteran's eligibility and replace it, and then yours gets restored, right? And so that's great. Here's where the issue lies with assumptions. If you're selling your house, and you're super stoked, property values have risen, maybe you bought your house with Jackie before, and now you've got $30,000 in equity in that home. That's great. You're gonna sell your house for $230,000, right? You bought it for $205,000, and you've been living there for maybe 2 years, okay? Now, your mortgage is gonna be less than the $200,000 you initially borrowed because you've been paying on it for the last 2 years. So let's say that you owe $195,000. Okay? If you owe $195,000, that means your loan is for $195,000. So when this person comes to assume your mortgage, they're only assuming $195,000. If you want to sell your home for $230,000, you see there is a gap between your loan and your sales price. This is your equity. This is what you will get paid when someone buys your home. So the person assuming your loan is going to have to come up with this difference unless you are selling your home for your loan amount, which most people aren't, because if you've been paying on a loan, it's lower than what your property value is, okay? This is the issue with assumptions. You cannot do an assumption for 100% of the sales price, right? Because you're only assuming the loan, right? So only assume the loan, everything between that and the sales price, they either need to bring you in cash or they have to come up with secondary financing for. So if someone is trying to assume your VA loan and they would do it just like a conventional mortgage, they can do 20% down and they can get financing for the difference. But there is no loan product out here in the world. I'm the vice president of the Raleigh Mortgage Bankers Association. I will be the president next year. I teach classes on assumptions to real estate agents and attorneys. There is no loan product accessible to you that will give you 100% loan to value in a second lien so that you can assume that first lien. There's just no bank. It's not available. The highest you can go with most programs is 80% loan to value, which means if you owe this much, right, this is your loan, here's your sales price, you can only get up to 80% in loans. You're still gonna have to come up with that 20% down in cash. And if they can do that, great, mazel tov, you can let them assume your mortgage, okay? You guys can't just go around assuming purchase prices. You're assuming the loan amount. I know this sounds silly that I'm like harping on this, but it is a really big deal. I have seen so many chat groups and so many Facebook conversations where people don't understand this, and they've got a couple Yahoo guys that invested in Bitcoin telling them that they need to go assume all these loans and they need to let people assume their mortgages, and they don't understand the process. This is also a very long process. You don't use a loan officer like myself unless you're getting secondary financing. This goes through your loan servicer. So whoever you're paying your mortgage to on the back end, they're the ones that go through the entire process. The fastest these have ever been done is like 75 days. Typically we say 90 to 120 days before that loan assumption is gonna take place. So if you need to sell your house, you have to be prepared that you're not gonna actually close on that house for 90 to 120 days. And again, if that fits you, it's a great option. Usually the times that this is actually a good option is when you're having somebody in your family assume the loan, right? And you're not trying to sell the house, right? You're trying to give your parents the house and they're gonna take over your mortgage, those sort of things. That's a great option for them, or kids, or I mean, it's usually family when this is a good option. Sometimes if maybe you just moved here and you were like, hey, we're stoked, we're gonna buy a house in Jacksonville, and immediately you got PCS orders so that your loan amount and your sales price are really close together. So someone could, in theory, like spend $10,000 and cover the difference. Then an assumption is not a bad idea. But if you haven't owned the house very long, you're probably buying at the same interest rate that your buyer on the house you're selling is buying at. So it really wouldn't do them very much good to assume your loan because your interest rate's probably going to be really close to theirs. all these loans people are talking about assuming are loans with 2 and 3% interest rates from 3-4 years ago. So they've got a significant amount of equity built up that someone has to cover the gap for. And banks just aren't going to finance that for you. Again, up to 80% typically, but not anything more than that.
So now that you've scared everybody about assumables, what are some of the things that you offer our office that for people that are trying to sell? Although you're the lender and you normally work with buyers, you offer us some things that we can give to our sellers.
So if you are smart and Jackie sells your house for you, one of the things that we like to do is give you guys as much control as possible. Anytime that you're moving, whether it's a move into a new home, you're buying a new house, or if you guys are leaving, you have to go somewhere else, we want to give you guys as much control over the sale of your home as we can. And obviously we can't control the buyer. But one of the things that we can do is I actually offer a listing incentive that Jackie can put right on her MLS listing. So when she goes and puts the house on the internet, she says all the great things about the house and how great it is and how beautiful it is. And then she can also put in there, buyers of this property can receive X amount of closing costs, say $2,000, right? Can receive $2,000 in closing cost assistance with use of our preferred lender, which is me, Crystal Vroman, CrossCountry Mortgage. What that does is it allows me to reassure your buyer's agent or your listing agent throughout the entire process and go, hey, these are my buyers essentially because I'm doing the loan. They're definitely going to close. We know they're going to close on time. You, on the seller side, you won't have their personal information, but you will have the same weekly loan updates you get when you're one of my buyers. The listing agent will have as well. So if there's any issues with the loan, if there's going to be any timing delays, it makes it a lot easier for us to make those changes because we do in a small way control both sides of the transaction at that point. So really great option for you guys. If you are either a first-time buyer or if you are a veteran and you are no longer active duty, you do also have the MCC program. It's the Mortgage Credit Certificate Program. It's absolutely fabulous here in the state of North Carolina. You can do two different things with it. One, Jackie can add it to your listing and say, hey, I'm the smartest realtor in town. Not only am I selling this dope house, but I also found out that this house qualifies for a tax credit. All that means is that the house price is under $385,000. But you, as a buyer, if you are one of our buyers, you personally may qualify for the same tax credit. Now you have some different criteria that you have to meet. The house just has to be under $385,000 to qualify. The Mortgage Credit Certificate Program gives you up to $2,000 back on your taxes every single year that you have that home, right? As long as you have the mortgage on the home, I should say. You are allowed to refinance once during that period and still maintain that tax credit. Now this is a federal tax credit. So when you file your taxes, you claim your dependents and you get deductions. After all your deductions are done, then you would receive that tax credit. Okay, so it's up to $2,000. Absolutely fantastic. I have one. Almost all the guys I served with, I got one. The issue is you have to get it before you close on the home. So it has to be done at the time you buy the home. You can't go back and retroactively do it. You can't reapply for one later. It has to be done when you close on the sale of your home. And your lender does have to have special financing, like licensing for that through North Carolina Housing. Obviously, I have that because I sell their products. It is a really good option for you guys. It's a very small cost. I think it costs like $750 to get set up with the program, and then you get $2,000 every single year. It's really, really great. It doesn't affect your interest rate or anything. It is literally a tax benefit program, and it's a great option that we can offer. But you can also use it to help advertise your listing and make it seem like it's a little more of an exciting property for new buyers to keep you guys competitive. Okay, now if you guys have any questions, I am super easy to find. Jackie has all my information. I'm the Cat Lady Lender. So I'm the Cat Lady Lender on Instagram, LinkedIn, Facebook. If you go to do a loan application, you can literally go to catladylender.com. My poor company had to buy all of those names in order to get me. They came after me for 3 years to try and get me to come work here because they actually do believe in what I do out here. And that's part of why I moved out here from the capital, is so that I can be a resource for veterans. We're fighting to make veterans a protected class in real estate right now. We've got 3 bills in the House right now that we're trying to help get passed to reduce taxes for veterans, things like that. So if any of these things matter to you, if it's something that you guys want to be involved in, absolutely reach out to me. Follow me on Instagram. I promise I don't post like weird loan stuff. Like it's actually stuff that's important and cool.
Lots of pictures of cats.
Lots of pictures of cats. My cats are dope. And then if you do close with me, I will tell you how many cats I actually have, and you will be on our Christmas card list. And they do have some adorable Christmas cards that come out every year. But really, anything that you guys need, Jackie's your first resource because she has me. She has me, she has my team, we're all local in-house. She has a great appraiser panel. There's very few things that she can't find answers to for you. So thank you so much for my time. I know I ramble, like I said, I'm a big nerd, military intelligence. I really love what I do for a living, so I am happy to answer any questions you have anytime. All right, thanks.